Welcome to another day in the Matrix. This is Red Pill Podcast number 40. I'm wishing you all a beautiful start to your new year. We are currently in 2022, and it has been a hell of a ride through the year of 2021. So here we are. We're looking at the yearly candles for Bitcoin, and as you can see, a generous 473 million% gain. What a beautiful close we had. I know the market has been seemingly bearish over the past month or so, and it's completely understandable, but when we zoom out, we get a different picture. So that's what we're going to start out with today. We're obviously going to be going over some of the larger time frames since we had our yearly close, the 3-month, quarterly, and then also our bi-monthly, and a couple other important closes. So we're going to focus on the technicals today, and then I do have something a little bit of caution, potential caution. Again, we've been using the date of Rosh Hashanah to kind of give ourselves somewhat of a place marker for big important dates moving forward in the future. But also we have something to discuss about March of 2020. And remember, the year of 2020 with the 2020 could be perceived as 22 because those zeros in the rules of numerology get removed. So that 22 is definitely reminiscent of what's happening this year with the 222. Just something to keep in mind because, I've been warning about this year of 2022 going back to pretty much April, discussing my feelings about potential economic collapse. But I've been very adamant about seeing a very bullish momentum into that collapse because that's typically how it goes. Whenever we have a big volatile crash, it's because we previously were in euphoria, where the market is very, very greedy, very euphoric, very optimistic, and right before it gets to peak optimism is typically when the market makers pull the plug. So again, if it is morning time wherever you are at, go ahead and grab yourself a cup of coffee or tea. If it's nighttime, go ahead and grab yourself a glass of wine or a beer or a beverage of your choice. It was definitely nice to be able to relax a little bit over the past couple days, but here we are back in action, starting off the new year. And this month of January has been something that I've been, maybe you guys have been hearing me talk about in the last maybe 10 videos or so, how I've been pleading for boring, sideways, kind of just really anticlimactic price action. That's kind of been what I've wanted for this month of January. And it's just because as an analyst, I've seen this market chopping around so much. And once people get trapped in longs and then once people start to get overly bearish, that's a perfect time as an analyst to sort of pick the middle ground. And I've been doing this for long enough now that I start to prepare myself with my bias, let's just say, not necessarily from an emotional perspective, but just from the work that I do, from sharing the technicals and also the way that I look at the dates. So for instance, the fact that we've had a bearish, let's just say the crypto market has been perceived bearish over the past month, it's actually not been when you consider all things. I do understand that the altcoins across the board have not been looking that great. That's to be anticipated, especially after you have a huge pullback in Bitcoin. Bitcoin pulling back all the way from 69,000 down to 41 to 42,000 on that wick that we got on the last eclipse. And we will talk about the eclipse a little bit and the upcoming Mercury retrograde. That's something that I will definitely be making a full-blown post on with the Patreon. So those of you that are interested in that, let me know in the comments below and I will break that down thoroughly in a week or so. I also will be releasing a little bit of a plan for what the next month or two will look like in regards to some potential decodes that I'll be releasing. I absolutely will be releasing that decode on silver very soon. And I'm really excited to share that. But anyways, back on track. This perception of a bearish market into this yearly close by the retail or by the the majority of the market participants, has been something that I've been keeping in mind for my own analysis, because we always have to consider sentiment as part of the game. When everyone is fearful, that's typically when it's time to get greedy. When you're actually a sophisticated analyst, when you're somebody who's looking to invest in a market that has opportunity, typically there's the least amount of opportunity in something when it has the most exposure, when people are the most excited about it, when it's getting the most love. So for me, the way that I've always kind of analyzed a market is I want to buy into things that are boring, bloody, anticlimactic, where people aren't talking about it. Because when you're in something when no one cares about it and then people start to care about it, that's when you get the dramatic gains. We've seen this happen time and time again in the crypto sector. We saw it happen with Dogecoin, and it was really fascinating to see how Dogecoin was impacted by this recent pullback, how it's still super low comparatively to where it was at that time, when it was 60 getting to 70 cents, I believe. I haven't done analysis on Doge in a long time, but I'm just stating this to kind of let you know the mindset, right? Because that's what this is all about. Investing is all about mindset, right? So when Doge was approaching those 60, 70 cent levels, I remember vividly, the whole goal of it was to sort of get it to, so yeah, you can see on this chart here, it actually hits okay, it hits 76 cents. I'm sure it hits 77 cents on a lot of other charts. Of course, that would be a beautiful 7 ritual for the Shemitah year. But anyways, when it was approaching those levels, I remember the sentiment was so fixated on this idea of a $1 Dogecoin. I remember that very vividly, right? That $1 Doge idea is when you really want to start getting out of what I'm trying to say here is, when people are already making tens of thousands of percent gains, and then they want to continue to push it further and further and further, and that becomes the sentiment, and that becomes the talk of the town, in the crypto sector at least, that's when you should get worried. That's when you need to start going, I think it's about time. There's technicals that we could look at. We could look at weekly RSI. We could look at a bunch of things. We could look and see if a project is getting overextended technically. But really, why get into a project that's already so up? When you look at a majority of the volume for Doge, it was in that 40 to 60 cent territory, and then it pulled back all the way down. Now it's currently 17 cents. And I'm not speaking negatively about Doge, I'm just letting you know the mindset. So when we have a project like XRP, for instance, and I'll just talk about this for a second, a project like XRP that has a prior all-time high of $3.20 to $3.30, going all the way back to 2018, very early 2018. I think we're approaching the 4-year mark now since those highs. And we're seeing XRP at 86 cents. And a lot of people would say, that's bad. That's a shit coin. That's horrible, right? And I'm not, this isn't my words. These are the words of retail, right? And I know that XRP is a very polarized topic in the crypto market, especially people who show up to my work, because I talk about XRP in every video, more as an indicator than anything else. I like to trade XRP. I've professionally traded XRP pretty much exclusively. Definitely some Bitcoin trading, but I was making a majority of my gains on XRP trades before I was doing this YouTube channel full time. And I know this coin like the back of my hand now. So with regards to this, I have a very, unique way of delivering my opinion on XRP and how I feel about it. And, that's helped a lot of people get out of some of the problematic content regarding XRP. No offense to those content creators, and no offense to those people that fell for that kind of clickbaity, nonsense, just to be straight up. But now here we are with taking into consideration everything I was just saying. We have a 70 cent Dogecoin and people want it to go to $1, right? Now with XRP, it's at 86 cents and people have already been discussing, $10, $15. I even have discussed my upside target for XRP's blow off top will be 760. to 15. That's my personal, like when I see it getting bullish, that's what I see it doing. Minimum of 760, upwards of 14 to $15. Now, now that that's out of the way, if we're seeing XRP at $8, $9, and the sentiment it goes to 20, where everyone's talking about, oh, we're gonna push this to 20, XRP army to the moon, all that shit. That's when I'm like, it further, solidifies my outlook on $14 or 15, because the way the New World Order works is they trigger the algorithm for the sentiment accordingly. So when, let's just say theoretically, XRP hits $7, then you're gonna see the algorithm start to favor titles that talk about $20 or $30 XRP. You're gonna see that become the norm, and it's gonna fixate people's minds on those numbers so that they don't get out at the right time. And I'm not telling people that this is 100% certain how it's going to play out, but I'm just letting you know based on what we saw with Dogecoin. We're going to see when XRP breaks out, or any of these OG coins, like for instance, Dash, Litecoin, those are good examples. We're even going to go over a more OG coin today, Zcash. When these things start getting overheated, typically the sentiment gets so bullish and so greedy that you hear the price targets get exuberantly higher than where they will realistically go. And that's what worries me, right? That's what bothers me with getting into projects that are already up, like Solana and Luna, for instance. Sure, there's more room to go on those projects. Anything is possible in the matrix. But why would we care about projects that are already overextended? Look at this. I mean, this candle right here is 13,000% on the year. Yes, it could go higher. Absolutely. So I'm just reiterating this from my prior video that I made when we were discussing it in a Red Pill episode. Structurally, this is an uptrend. There's nothing wrong with this. But your ROI potential at these levels, for it to go another, 30% higher, it's not even as close to what's possible with something like XRP. So I am just speaking for myself, the way that I analyze a market, and I feel like this is really important to start out this week's episode because it's the first episode of the new year. For me, it's all about opportunity. And if I'm going to put my money in the most speculative asset class that exists, I'd rather put my money, a reasonable, conservative amount of my money, in projects that have lots of ROI while they're boring, nobody cares about them, and it's time to, get ready for people to start caring about them, because that's what an alt season does. An alt season starts giving shine to shit that doesn't even matter, right? We've seen that happen in the past, where all tides rise together. That's what happened in the beginning of 2020, by the way. Just once 2020 started, it was madness. It was just everything was breaking out in a straight line. Use case, no use case, solid fundamentals, no fundamentals, did not matter. Because once the New World Order wants to start putting a couple billion into one project here and one project there, it will go where it needs to go. And the sell wall that they put up is precisely at a level that you could figure out with Gematria and numerology. And we've shown that so many times on this channel. We have shown that so many times. So for me, it's about buying the boredom, buying the blood. The time to buy Luna was down here, not start buying it up here. But when it comes to things that have done really well, people typically wait too long and then they stare at the charts, and that's FOMO, because they're wondering what's the next entry point for something like this. And in my opinion, it's past its prime. This is not opportunity anymore. Again, I'm not telling people to not invest in this project. I am just telling you the way that I perceive this market, right? So let's get to some of the analysis on, actually one very important thing while it is on my mind. It is the date of the 7th, 8th, and 9th of January. Let me just go back to the Bitcoin 12-month candles really quickly so I could leave this where I was intending to start the analysis. So let's go to here. So this date right here was the infamous big red death candle that we got in the crypto market in 2020. It was March 12th, the day before Friday the 13th of 2020. And this day of Friday the 13th is definitely something I'm considering, but that was the low. So the big death candle we got in the C word crash was on the 12th. That was when it just all went to shit, like things were losing 50% in that single day. And then you have the following day, the lows. But the crazy thing about this day, Friday the 13th in March, is we got our lows and then we actually finished the day green on almost everything. Almost everything bounced off of that low. So I'm just telling you this to give you something to consider. So if we go from the 12th to the 7th, which is 5 days from now, this will be 666 days since that event. Now, am I saying the 7th we're going to have a crash like COVID? No. I'm just sharing this, so don't shoot the messenger. Okay? Now, the following day would clearly be the same numbers if you're considering the 13th over 666 days. And why this 13th date is really interesting to me is, of course, it had that 56 date numerology. We know where this 56 is coming back to. I've spoken about it a lot, but I don't want to get too much into that. But this combo of the 56 and the 11, the standard date numerology of 11, and of course the 12th being the 72nd day of the year, 72 coming back to Bitcoin English ordinal, and look at that date numerology of 55. Okay, so 55 being the 5 5s, coming back to 25, or 2 5s, which is 55. It's a very special number if you actually perceive it the way I just explained. But moreover, you have that 10 date numerology, which 10 is where the cycle restarts, right? We have 1 through 9, which are the numbers in our, those are the numbers we have. And then after the 1 through 9, we go to 10, which is just 1 next to 0. So 0 being the egg, the cosmic egg, 1 being the connection to source, 2 being duality or the male female or the sun and the moon, 3 being the trinity, or when there is a mediator involved, a translator between 1 and 2 to give rhyme and reason to the duality. Some can perceive this through the story in Genesis, through Adam and Eve and the serpent. 4 being Dalet, the door. You could continue, right? But this number 55 is interesting, and getting back to that number 10, that is the binary code, the ones and the zeros. That is the quantum realm. That is where things start going quantum. And then 11 would be your complete restart. So 10 is sort of that transition number between the last number 9 and to move on to 11, the master number, which can also be perceived as the 1 and the 1, or the twin towers. Okay, so a little lesson there. But I'm, now that we're seeing this date numerology of the 12th giving us that 55, and remember, where does that 55 come back to, guys? Satoshi Nakamoto, being the 72nd day of the year, which is going back to Bitcoin English ordinal. And this is so fascinating because this entire connection gave us the lowest price on that day. So if we go back to that exact day and we actually analyze what the price was, we're going to see it right here. That big death wick on this day. So you can see that the day actually ended a 16% up. It was plus 16% on that day, even though it was the absolute low. And you see this candle the day before, this was 39% down in a single day. So imagine what that did to the altcoins. This was crazy. But one of the other things to consider is if you go from like the bull trap high to where it retested bull trap high, it's like 54 days. So pretty much within 2 months, it recovered through this. And it was really just 2 really shitty days, followed by 4 days later, there was a fake out, but pretty much went into a solid uptrend from there. I am not calling for a crash anytime soon, by the way. I'm just letting you know that if this day we get big volatility, I would play it as a fake out personally. I would not play it as a resolution day. So if we do get like the 7th is weird or the 8th of January is weird, I will not take that as like a trend reversal date. Another thing that I've mentioned in my prior videos was how the month of January, historically, we have not seen market crashes. Okay, so because the 7th is on a Friday, that's the closure on the weekly for the stock market, and Saturday the 8th, again coming back from the 13th, the Friday the 13th over to the 8th being 666 days. This Saturday connection, I don't think there'll be enough volatility in the market to make this happen, but we did have December 4th, and I believe December 4th was a Saturday, correct? So, yeah, I mean, we can't 100% say with certainty that that day can't be powerful, you know? So, the 7th and the 8th, I'm keeping in the back of my mind as potential for something to, yeah, something to happen. Could be a volatile spike to the upside as well. It could literally be that the 13th of March was it's like an as above, so below effect. Maybe on the 7th, we start to pump, and just have a green candle, which was the reverse of this candle on the 12th. And it's just the start of a recovery. I don't know. No one knows. It's not really about knowing at this point. It's about being prepared. And I just wanted to get this out to everyone before these dates come. You guys know that I always try to do that. But this 666 number we know is important. Wasn't there a connection between the new variant, the Omicron? Wasn't there a connection between that and the release of the information about the pandemic initially? I'm pretty sure I heard something about that. So that's really fascinating as well. Somebody was sharing that with me, and it could be true. I mean, I'm not necessarily certain because I don't really spend too much time researching that stuff, but I did hear somebody bring that up to me before. So definitely something to consider. The 7th and the 8th are definitely dates that I'm keeping on my mind, but I do not think we'll get trend reversals. And remember what I taught you guys a couple months back about the hash ribbons indicator, which I don't have up at this time, but the hash ribbons indicator pretty much flashed at around 38,000. So in regards to downside, back tests of this lower wick would be 100% possible. Anything's possible. But since this is looking like a double bottom structure with a clear neckline, which would be a W breakout, I would not be surprised if we arranged and maybe on the 7th or the 8th we get some big choppy, price action. One other thing I could say too. Oh, sorry, I should finish my thought about the hash ribbons indicator, excuse me. So the hash ribbons indicator historically flashes and we do not go back to those daily low prices ever again. So the daily low, I believe, was right here around 38. And there was only one time where that hash ribbons indicator failed, and it was because of the C word crash, this crash that I'm actually measuring from. So I know that does give evidence to potential failure of that, and I know that's not necessarily what people want to hear, but I'm just telling you the truth. It's the Red Pill podcast, so I have to tell everyone everything that's going on here. So for anyone that's in trades, if you are wanting to be cautious at this time because of this new information I'm sharing with you, consider to de-risk if you're in profitable trades leading up to the 6th of January. I'm not telling you to close positions. I'm not telling you to open positions. I'm not telling you to go short. I'm just letting you know that those dates we know are important. We know that the 13th of March was a ritual date. Anyone who studies numerology, you know that. And I mean, is it a coincidence that it was the 55 date numerology with the 72nd day of the year? All tied to Bitcoin and Satoshi Nakamoto, and that was the lowest price that we saw Bitcoin go, which brought everything else down with it, with no exceptions. Just something to keep in mind. Give me 1 second. Okay, just grabbing a little bit of water. So I wanted to let you guys know about that. I mean, I wouldn't do a full-blown post on this because it's just not that. There's not much to say besides this connection of the 666 on the 7th and the 8th. And then I believe on the 17th we have our wolf moon. So it's going to be we could all enjoy that together. Hopefully the market will be bullish into that time frame so we could celebrate it. The wolf full moon. I didn't even actually know that there was that until somebody brought it up to me the other day. Oh, and also this date right here, the 12th, will be the 22-month anniversary of this event. And the 13th would also be perceived as the 22. And this would also be 1 year and 10 months, going back to 11. And if you look at this date numerology, it matches across the board. Some very important what I'm showing to you right now, for those of you that are interested in the numbers. So let me just recap what I said. So right here, you can see the date numerology going back to Friday the 13th of March 13th, 2020. You got the 56, 56, 20, 20, 11, 11, 36, 36, 99. And this being the 13th day of the year could be interesting, but when we have all these matches in the date numerology, followed by the fact that it is 1 year and 10 months, which is the 1-1, and then 22 months difference, the 22, 11 date numerology, and matching all the numerology, I mean, just keep that in mind. This could also be a date to perceive as something. And, I am just kind of like, I'm ready for anything at this point. After we get big, corrections in the market, I become the calmest version of myself because I've learned that benefits me the most when I'm looking into my date numerology for the following week or so. I try to keep it like 1 week or so at a time, unless I have something else that I think is more important for us to be prepared for. And this was definitely something that I was thinking about, this connection to the 7th with the 666. And this was a global event, by the way, guys. We do know that the 12th was globally important because the whole market had a huge correction on that day. The entire market on the Thursday and the Friday of March 12th and 13th, 2020. So this isn't just exclusive for Bitcoin. This was everything crashed. So that's why I'm bringing it up. It's not a joke. But take that information how you will and play it accordingly. I will probably be protecting my trades moving into later this week if I need to. And, another part of me is thinking I would not be surprised if it's like an as above, so below thing where we're just going to do the complete opposite of this. Historically as well, Bitcoin tends to move bullish into the 8th of January. That's another little key point. If you go back to almost every January for Bitcoin, it's up to the 4th of January or the 8th of January. We're typically pretty bullish, and then we do get short-term corrections. So until Bitcoin can start trading above 52K, we're kind of just chopping in the lower level, and this could be a double bottom. If we start to break this wick right here around 49, then that would show us some strength. But, selling or de-risking into 52K is not a bad idea for those for the traders out there that like trading the trend. Because right now it's seeming that every time we get around 51, 52, we get rejected. So let's get to the analysis. We have the yearly. This is clearly a continuation candle. So we have this year of 2021 closed green with a 59% gain. So let's look at some other years and see. So right here in 2015, that iteration was 33% gain. So this is like the second lowest percentage gain that we've had for our green candles, and it's actually pretty solid because this 3 green structure that we got in the middle, a lot of people and myself were perceiving this as potentially a pattern repeat where you have the red, 3 greens, and a red. Now, this idea was that the 3rd green candle would be your blow-off top, and that was why you got the red. But now we've yet to get our blow-off top, and we've also seen that the RSI on the macro timeframes hasn't reached nearly as high as it usually does when we have a blow-off or an end of a bull run. And with that being said, we're also seeing the market pretty much maintaining an uptrend going into the yearly close. Again, Bitcoin is still in an uptrend until it starts closing below 39 to 40,000 on weekly candles. And of course, we'll touch on that in a second. But this would be really interesting because we can see that the final candle before we get a big red is typically a really nice gain. So we see this one right here was 1,330%. This one right here was 5,300. I believe in the last episode I showed you that if we did some simple math, that puts us around a 300% gain for this candle if we're going to consider it on an average. And a 300% gain puts us close to 200,000. And I'm still kind of in the mindset of thinking we might not get to 200K for Bitcoin this cycle, but we do have 90% of the Bitcoin supply taken up, and we are getting an extended cycle. And when we get an extension, I'll take that back. We don't know if we have an extended cycle yet because we're only in January. So one step at a time. For those extended cycle people out there that are calling it an extended cycle, they don't know if we're going to top out in March or April. And in my opinion, extending a cycle by 3 to 4 months is not an extended cycle. An extended cycle is years of extension. And that would be the anomaly. So either the anomaly would be we entered a downtrend, which would be Bitcoin starting to trade below 3. You can't even perceive this anymore. It's just so silly when you look at it on a yearly. Almost everything in the market looks kind of like this if it has more than 10 years of data, just because of the fact that we live in a fiat-based economy that's ever printed, and it dilutes the value of the currency that it's paired with. So you should all know that already, though. Now, with what I was trying to say was that 300% gain does put us into, like the 160, it would put us into the, I believe it's like 210. So if we close the yearly around 46.2, such an awkward number to close on. So yeah, that 300% gain puts us around $180,000 Bitcoin, and that does get pretty close to the top of the logarithmic growth curve chart that we've discussed. If we're gonna put it out to April, that puts us around there, and that's about where I think this show will end. I don't see it extending past April. It could though, and if it does, I still believe that we'll get a pullback into April, May, given that we're going to recover from here. And that sentiment has to deal with the upcoming eclipses that we have. We also have Mercury retrograde coming up soon, and another Mercury retrograde around that time as well. We know that Bitcoin likes to do a volatile move on Mercury retrograde, so it's just something to keep in mind because we are moving into Mercury retrograde, I believe on the 13th of January, which, damn, it's that day that I was just talking about. This day right here, we were just talking about this, how it has the matching date numerologies and the 22 months and the 1-1 on the 11 date numerology matching. So that's Mercury retrograde. It starts on that day, I believe. I might be a day off, but I do think it is the 13th of January. It could be the 14th. I'm not entirely sure. But anyways, let's move on. Bullish close, continuation green candle. Enough said. So now we're looking at the 3-month. 3-month, very awkward. When you look at it in log, it almost looks like a gravestone doji, but when you look at it in linear, that's technically not a doji. You would want a much thinner candle body to perceive that as a doji. So anyways, this is green. It is above the prior quarterly close. I do think this wick looks disgusting, but other than the wick, it's not horrible. Now, it would be really bad if we started closing below 35. That would show us a bearish engulfing. And at this stage, to start seeing below 35 would be obvious downtrend. And we're not there. We closed the 46,200 area, and we're looking okay at the start. So that was the quarterly close. Now this doesn't look good. So we have the bi-monthly. The bi-monthly, we did have a bearish engulfing. And this bearish engulfing candle, it's not the end of the world, again, because we are above the prior low closures in the trend. You can see that below here, below 35,000, it's pretty much thin air going back all the way down to 28. So that would be bloody. And that would be the basing structure. That would be an obvious level if there was to be a big dramatic pullback for Bitcoin. It would be around $30,000 with wicks to 28. And the reason being is because that was the closure resistance back in November, and then your back test levels that we spent some time at in January before we had continuation, the retest levels of May, June, and then that was pretty much the level that we recovered from at the lows, and that was in alignment with back-to-back eclipses and a Mercury retrograde following that, which led to new all-time highs actually. So let's look at the let's go back to the bi-monthly and look at our simple moving average. Okay, so yeah, we had a shitty looking bi-monthly close, but we were above the 8 simple moving average, and it's not bad. Let's look at the RSI. We should probably keep this up. Okay, so MACD still bullish with lots of separation between the moving averages. We have a 63 RSI in the bi-monthly. Obvious divergence because you have a low here at around, clocking in at around 91. And then you have highs here with a clocking in at 62 with the prior high in the structure being 73. So it's a downtrend on RSI with an uptrend in price going back to the prior highs to our current all-time high. But sitting above 63 keeps it in bullish control, and this is kind of like par for the course for an asset that has this much market cap and has been trading at, pretty much sideways now going on a year. Let's look at, so the bullish things to say is, even though we had a bearish engulfing candle, we did remain above the 8 simple moving average, still above 50 on RSI, and still bullish on MACD. That was what I wanted to mention. Now, okay, let me hover here, and we could see that the 8 simple was 46,171, and we closed at 46,194. Fuck. It's like $8 more or something. So we closed above the 8 simple. That's crazy. Okay. Let's see these. All right, so yeah, you could tell that the 13 on the monthly is a very strong backtest level, and currently the 13 is sitting around 43. And I brought that price up many times to you guys. I said if we are going to get a low soon, it's probably going to be 43. And that makes a lot of sense now that we're seeing the monthly 13 around there. But let's look at all things considered. One, the big standout problem here for me is this really sharply down-sloping moving average on the MACD. I do not like. Let's look at volume. Volume's still in a downtrend, still low, very low actually. And RSI is above 50. It's pretty much at 60. We're remain bullish on the MACD, but I do not like it. This has to get up soon. At least close this next month in the 50 to 53 would be ideal. But for now, I mean, this isn't a downtrend, but it's not looking great. But maintaining the close above the 8 simple moving average by about $10 is pretty hilarious. And that's bullish. That's not bad. And of course, the first level you're always going to show some resistance on is going to be that same moving average, the 8. And that's why the shorter term moving averages on the larger time frames are always something to consider. Also, I hope you guys appreciate this analysis. I'm trying to be extremely thorough, calm, and break this down to you analytically with the data. Trying to leave out, as much emotion as possible because we have a clean slate. We started a new year, and we have to go with what the data says. That's really what we have to do to remain sane in this crazy crypto market. So I hope you appreciate that. But anyways, so yes, backtest of the 13 is still in play. That downside target of 43 is absolutely possible, especially with the way that this market's been acting lately, with the potential date of the 7th coming up soon and the 8th with that 666-day connection going back to the C word crash. And what this is looking like to me still is a huge ascending triangle pattern, which I do believe would have a breakout target around late January, which is furthering my bias of boring and sideways for this month, which I would love. I think that'd be really nice to just have boring sideways, get above this 8 simple moving average on the monthly close. Bollinger Bands are showing us pretty much 70K would be the topside area on the wicks. We know that the topside Bollinger Band on the monthly is really nice for pretty much our highs. But you can see here clear as day that once it closed above the topside Bollinger Band, that was when continuation happened. So these multiple rejections on the topside Bollinger Band followed by literally pulling back to the 8 simple moving average. That's really interesting to me, and that's something that as analysts we need to take into consideration. That's a very great way to use the Bollinger Bands. Now, if we get closures above the topside band, that typically tells us about continuation, and to have it on a monthly is major, because you can see right here, once we got above the topside band, we remained above the topside band for 180 days. We're looking at half a year there. And once we topped out, I would assume this also aligns with a pretty high RSI. Yeah, you're looking at 91 RSI to 89 on the monthly, right? Now we're at 59. So in my opinion, this has room to go, and that's how I would perceive this from a more macro perspective moving forward. I would look at that topside band, see how we're interacting with that. I mean, seeing Bitcoin at 70 would be like a dream at this point, because it would give so much liquidity to the altcoins. I'm not saying that we're going to do this anytime soon. We might not even see 60K this month just because of the technicals. And the lack of volume in this market. But you never know with these lizards. They could pump money into this market whenever they want. Excuse me. So yeah, with that being said, definitely something to consider with the 8 simple moving average on the monthly. Getting above that and maintaining above that would be nice, and then holding support on that 13 exponential moving average on the downside would be something to take into consideration. And on our next monthly close, which is, we're a month away, excuse me, we'd be looking for this cross, potentially bearish cross. And if that happens, that's a big sign to, go back to the drawing board. Let's go to the bi-weekly. So we do have a bi-weekly close coming up tonight. And excuse the rain. If you hear the rain, I am sorry. I can't control that. It might be a little loud, but I'll try to talk clear. So let me turn off the Bollinger Bands just so we could get a little bit clearer of a picture, and you could see what's going on here. The 8 simple moving average is kind of stalled out. The 13 is sloping to the downside, and this 21 is kind of maintaining an uptrend, and this is really coiling up together, but they are in bullish posture. So when we're looking at the bi-weekly, which we have a close tonight, I would ideally like to be above this 21 exponential on the bi-weekly, which is sitting at basically 46,000. So getting a close above 47 would be really nice. But the problem here is any closures below these 2 moving averages are going to maintain their posture to the downside. And when we're analyzing the way we use moving averages, we want them in a up slope, sloping to the upside. So we are in bullish posture, though, where we have the 8, 13, 21, 34, 55, and the 200s, and that's fine. That's completely normal. That's what you want to see in a bull trend. And this is the bi-weekly, by the way, guys. This is not a small time frame. But we can see that the prior close that we had was a continuation of a continuation candle of the downside. So this is sort of where we look at for bottoming. Are we going to bottom? And if we could have multiple bi-weekly candles sitting above this 21 exponential, that would be a good sign that we're coming to a conclusion on this pullback now. With that being said, we do see here some data going back to the prior highs in April, the big pullback that we had around May, and a bottoming structure that took a long time. And this is something that I brought up a couple of times. I also brought it up in the Trading Wolves, this discussion behind back-to-back eclipses sometimes give us a fake out again with further continuation to the downside. And where would we expect to find support? I think this bi-weekly 34 EMA gives us a sign, and that's 40,000. So that would be really a shakeout, right? Because we know that the 38,000 level is where the hash ribbons indicator flashed buy signal, which we typically do not ever go below those prices ever again. And we maintain closures on the daily above those levels always, except for one iteration, and it was a black swan event, the C word crash. So what that would tell me is, most likely if there's going to be more blood in the market, it's going to maintain closes for Bitcoin above 39 and then holding support on the bi-weekly above this 34 exponential, which is the red moving average you see right here. And we could see clear as day that that was what held support during the last big correction we had, where we needed some sideways, bloody, boring action on the downside before a new high was put into place. So consider this 34, right? We're going to close tonight, which is going to bring this 34 slightly up, unless there's like a flash crash in the next 6 hours. This is going to flip to probably 41,000, which is great. And you can see wicks, a wick within, but then this two back-to-back wicks. This was the June full moon, and this was the July full moon, right? So the next closure is coming in on the 17th, which is the day of the full moon. So if this closes bullish and it gets to like 41, perhaps the next close is going to be around, 42. Still pretty much pretty much within the wick from the recent dump on the 4th of December. Wick retests of this 34 are in the cards, and I'm talking structurally. Like, I know it's not fun. I don't want it to happen, but it could. And once we've done it before, you got to take account to how it could happen again. So, yeah. It's fine to talk hopium, but we also have to be realistic. I mean, you could see in 2017, this was a much easier market to navigate because on the bi-weeklies, we kept above that 13 exponential the entire ride up to the blow-off. If we go back to the 2014 run even, you can see that we maintained above that 13 exponential the whole time with one back test of the 21 in 2013, which was like the best buying area ever to go off of that 21. Now you can see it's a different story. Now we're in a different market, and this is showing like overall that Bitcoin's becoming more mature because it's holding these levels a lot longer. And I would venture to say if Bitcoin recovers from here, even if it was to drop to like 43 or 42 and then bounce, and then we recover into February and March with new all-time highs in the six figures, and this is theoretical, but even if we were to do that, I would venture to say that we might never go below 40 ever again, even if there is a big crash. And it would be because we're growing less in price, we have less ROI, but we should also have less dramatic downside action. The past two bull runs for Bitcoin, I believe there was about an 82 to 83% correction. And I think there might be 3 iterations of that, all with blow off tops before that. So you have blow off top, 83% correction, blow off top, 83% correction. I think it happened about 3 times. Now, that's dramatic. That's like what altcoins do. And it seems that, this basing structure that we're getting right here, although people might not be Bitcoin holders, we're well aware now that the Bitcoin analysis is absolutely crucial. When Bitcoin has a huge crash, all of your altcoins crash typically. So if we were to see negative price action for Bitcoin moving into the next couple weeks, we know that's going to bring down the alts. If we had positive price action for Bitcoin, we know that's going to bring gains to the alts. So that's why the only chart you really need to pay attention to is the Bitcoin chart. I've proven that already, and I hope that that's, understood by now. You don't even need to hold Bitcoin necessarily, but learning the TA on it and learning how this market actually operates from a liquidity perspective, you'd get way more growth and progress in your journey of becoming an investor by just learning the TA on Bitcoin. So the point of what I'm trying to say here is that because Bitcoin has spent so much time around 40,000 to 50,000, that's a really key level that once we finally break these these levels, once we finally enter true price discovery for Bitcoin and it approaches the six figures potentially, this would give us a sign that this is the level of support. Okay, it would be right here, $60,000, because we have all these bi-weekly closures up here. You could see that. That's months of trading resistance there. And then we barely got above it going back to November, right? So we know that 60K is like the tipping point. Once we can start to close above that and actually really hold that level, it's game on. And if we're going to break out to six figures, we're probably going to return back to 60 if there's going to be a correction blow off top. But because Bitcoin has 90% of its supply taken up and it's becoming extremely scarce, we might not be getting these dramatic 80% pullbacks for Bitcoin anymore. That might be it. And it might just become a boring asset after it hits six figures, and that boredom in it will obviously make it more secure and safe. So anyone that got into it at lows at, below 10K or even below 20K, you're a happy camper because it's like the new gold. It's like the new store of wealth for those individuals. People who got into Bitcoin in 2014, it's like it's gold to you. If you got into it in 2012, it's gold. But now it's a different story because it's been boring and sideways above these levels. And obviously the conversation is, what altcoins do I get in? And that's been why I typically only purchase altcoins at this stage. You can see what I'm buying and selling in the Discord, and it's exclusively altcoins. I haven't bought Bitcoin since it was like maybe $12,000. And again, I was buying it when it was boring, like real boring and down. Not when it was exciting and everyone was talking about crypto and it was up. Here it's been exciting because crypto is the talk of the town, not just Bitcoin. I'm talking about crypto. We're talking about, since Bitcoin has done this move, we've heard about institutions, we've heard about, MicroStrategy. Michael Saylor became like a god out of nowhere for whatever reason. Elon Musk is a hero because he bought Bitcoin, then he's an asshole because he sold it, and then he's a hero again because he tweeted about Shiba, and then he's an asshole. You know what I mean? It's like crypto is the talk of the town now. NFTs, metaverse, etc. This is when the market is unstable and easy to manipulate because you have so much attention in the market. When it has no attention and it's boring and it's hated, that's the best time to buy. Here, crypto was a scam and everyone hated it, but then this dip led to 10,000, 20,000, some cases 70,000 plus % gains for the altcoins. So remember, it sucks to see these corrections, but it's actually the greatest times to get in, not when we're sitting at resistance highs. So that's why when it comes to the altcoins that are down currently 70% or 80% from their highs, those are really enticing to me because those have opportunity. And because we haven't seen a full-blown alt season necessarily this cycle. We saw one. I'll take that back. We saw an alt season, but what I'm trying to say is the big, crazy, synchronistic blow-off top move that we typically see. With ETH, XRP, everything moving together. We saw that happen in the beginning of 2020, but it's not the same way that it was before. And maybe that's another conversation to be had, because I have spoken to some analysts that think that, it was this C-word crash that reset the market to give us the alt season, and it's the only alt season. But here's where I challenge that. So what the hell's going on with crypto.com? What the hell's going on with Solana and Luna? What's going on with Avalanche? You see why I'm contrarian to this idea that it's over? Two reasons why I don't think it's over and why I'm a contrarian to the idea that we don't have another alt season coming. One of which, it is the performance of a lot of other cryptos recently, and the amount of Tether and stable coins in general that are sitting on the sidelines waiting to be used. Those two things combined. Oh, and there's one more thing, and this is really, really contrarian. We have yet to see an XRP dominance shift. So those three things yet to happen are telling me that we still have another alt season to go, a true blow off top alt season. with overextended RSI levels on macro time frames, all that jazz that I teach you guys. So let's move down to the weekly. Weekly, definitely not looking good. Multiple closures below that 34 exponential, looking very similar to going back here when we had the dump into May. Let's look at the 55 simple moving average. There you go. That's your sign. So this 55 needs to hold, like typically holds. And this goes back all the way to when we had the C word crash. So you see right here, just pay attention to where my cursor is. I'm going to move it. We held that 55. And even before that, you could see we were holding it on the closures. Then we had the one close below it, and it just fucking dumped straight to the 200. Okay. Then once it got above it right here around April, it maintained above it, and it still has all the way to today. So this 55 simple is fucking so important. And I think we do need to keep above that on the weekly to maintain the bullish trend. If not, we're probably reversing down to these lows around 40. And then if that doesn't hold, we have the next level, which is here. And that's, we're looking at a bloodbath. That would be basically similar to the COVID crash. If we start doing anything, at this time of reversing lower than that 28, it would basically be a double repeat of what happened between April to June. Pretty much the same thing twice. I mean, I really, nobody wants to see that, but that's the kind of move that we need to see, really dramatic ROI to the upside, unfortunately, because we know what this brought. But these 200s sitting around 25, that would be a huge move. And yeah, something to consider, though. Definitely something to consider. Technically, not holding this 55 on the weekly close, we have seen problems. So I'm just letting you know straight up that that's an indicator to keep an eye on. Another thing, the weekly 8, 13, and 21 are sloping to the downside, and everything is squeezing together. So because these are squeezing together, this shows us that anything over the 8 simple moving average on a close, so that's above 53, would show us probably resolution to the upside. So closures above that 52 to 53K on the weekly. And then we would have continuation, probably to retest prior all-time high. I would say 60K would be our first step for big resistance after 52, because 60, like I told you before, that's where all of our key closures were being rejected at, like on a monthly. And yeah, 60 is just a flat number, and Bitcoin's been struggling with that for over a year now, or about a year now. So yeah, the fact that these are all coiling together, we do not want to see a wolf cross, by the way, to the downside. If this 8, I mean, it would take a lot of sideways action, but I'm just letting you know, a wolf cross with the 8 below the 55 on a macro time frame, like a weekly, no bueno. No bueno. And we could see that happen right here around the COVID, or around the C word crash. You could see the 8 went below the 55, and it was up until we actually saw this flip bullish where the 8 went above the 55, where this maintained structure, but basically backtesting the 55 simple moving average on the closures week after week after week after week, all after that crash. So when these big crashes happen, although they're a V-shaped recovery, we've seen those V-shaped recoveries, it follows by some slow, arduous boredom. And I rather boredom now, get it out of the way, and then move up. That would be the most ideal, in my opinion, at this time. So today we have a 2-day close. The 2-day close clearly holding on this 200. Let's see what's going on here. So you can see back around the big correction between all-time high in April down through the lows in July. We did backtest this 200 simple moving average, which since has crossed. And in my opinion, that's not a good cross. The 200 exponential crossing below the 200 simple, that's not good. And we would like it to be the other way around, where the light green is above the dark green, in my opinion. And you could see that happened around last Rosh Hashanah. And right where it crossed bullish, we had a pretty explosive move, but that was for other reasons. Anyways, the 200s are always our key levels to hold for macro support. And you can see we wicked down to this 200 simple. So far, we've wicked down to the 200 simple on the 3rd or the 4th, and then held it near our close on the year, have bounced since, but all of these moving averages are looking bad right now. So we have the 34 above the 21 above the 13. That means that our EMA band is bearish. And we could see a wolf cross with the 8 below the 55. That is bearish. We could see the 55 is above all the EMAs, bearish. And the 200 exponential is below the 200 simple, bearish. This needs time. This needs time to build some support and confirm that it doesn't want to break these levels. But breaking those 200s would be catastrophic. You know, you would start to see a cascading effect to the downside, as we've seen before. Here, holding that level with a bounce, then a huge fake out. This was a bull trap fake out. You can see, going back to the last bull run, when we had our blow off top, we went straight down to the 200 exponential, bounced, bull trap, double bottom, fake out, and then this was a confirmed downtrend. So this 200 played a key role, and then you see right here, once we started closing below it, we came up to backtest and got rejected off the top of it. This was clearly a totally different scenario, though, because this was a blow off top and RSI levels that were probably in the high 90s. Yeah, so this was like a 96 RSI or something. Lately, you know, the last time we saw RSI that high was going back to last year at this time, January 2021. Now we're in January 2022, and 2-day RSI is sitting at 42. So totally different reality right now. And the MACD is stalling out on the 2-day. You could see it's wanting to cross up, but it's been struggling. So we would need a couple bullish 2-day closures. Today's not necessarily looking like one of them. It'll be okay, but I would really like to see closes above the 8, ideally above the 21. And that 21 getting below the prior 2-day closure highs, another story of, you know, basing, bottom, boring. Let's end it with the daily analysis. That's probably be the longest episode we do to start off the year. Cut it down next week. Okay, so yep, we can see here that this is where the daily starts to get pretty problematic. We are in a bullish MACD structure so far. RSI is below 50. That's bearish. We can see that this 8 simple is starting to cross below the 200. Jeez, man. Really bad. Really not good. Like, this we haven't seen since this this iteration right here back in May. So yeah, this is not on the moving average side of things. This isn't good. Let's look at our Bollinger Bands to see if we got bottom side. Okay, so yeah, we have some bottom side support coming in around 45. That would pretty much maintain us around these wicks. If we were to just wick down really quick and bounce, you can see that the Bollinger Bands are squeezing at this time. But one key thing to look at is this 55 being above the top side Bollinger Band. What we want to see is this top side Bollinger Band cross above the 55, and more sideways and slight uptrend will allow that to happen, and that would typically lead to a pump. And let me turn off these Bollinger Bands and say one last thing. With this 55 coming to the downside at the slope that it's coming down to, it allows this 8 to eventually get closer to crossing. So getting above this 50 level would really be healthy looking. Obviously, we have our neckline right here around 51. Until we could get above that 51 level, though, it's not looking good, man. This needs to figure itself out. And it is a weekend. This is retail trading. We have CME opening in like 4 hours, so we'll see how that goes for the CME open. But, you know, definitely not looking great. We have a basing structure around 45, 46. So here's the last thing I'll say before we move on to the ETH chart. And then we'll move through the altcoins. Closures for Bitcoin below 46K. And I suspect move down to 43. Closures above 50,000. Let's just call it 51,000. And I expect a swipe up into probably 58. 50, 57, 58. Okay, so for now, this looks like a double bottom, and we have a clear neckline resistance around 51K. Anything above those levels, and I anticipate a swipe to 58, 59. And as for the downside, if we can't hold 46, I suspect 43, which would pretty much be a fill of this wick. And then I would anticipate we fill the wick a little more, and we would probably have something like this where we have like a downside resistant or support level coming in like that. So, you know, it would be falling down on this trend line. You see the trend line coming here. It's most of the closures on the daily with the wick touches, but it's always closing slightly onto this trend line. You know, that would be like where I would anticipate the catch, and then it would trend down until resolution, and that would almost be an identical repeat of what happened here. So let me turn off all this. That would be an identical repeat of pretty much what happened back here. So let me show you if I can do a bars pattern. So I'm going to go off the June 10th correction time. Actually, no, let me just go off of here, off the big dump. And then go to like the next correction. So it'd be something like this. This is obviously very dramatic. So we have our high, and then we have the big dump, and then we just trend down into like, you know, maybe even as late as early February, and then start the trend reversal. And that would be about the same amount of days, the same idea, because back-to-back eclipses with a huge dump. So remember, we had back-to-back eclipses around here. We have the huge dump. We had the bull trap fake out, and then went lower. And that bull trap fake out would have been this that we just experienced going back to around Christmas time. Then we are in this downtrend right here. Then kind of a big W pattern comes out of it all. So that is in the cards if we are going to see downside, and I would suspect that 42,000 level around the 382 fib, or the pretty much where the wick came down to, you know, the 43, 42K level. Yeah, that's possible if things get bearish and we cannot hold that closure low at around 46 and the wick lows around 45.6. I mean, it's pretty much they're within each other. But one last thing, we do have this resistance trend line right here, which is pretty much in alignment with the 618 fib. And like I told you, it's around 51,100, giving us another reason why we have yet to see a breakout of that level, because it's the bottom of the golden pocket. And this fib pull goes all the way back to April. Swing high of the April 14th top all the way to the swing low of the June 23rd lows. So you're pretty much looking at, you know, that's a key resistance level. And once we get out of that, I mean, we do have potential this firmament resistance, which would have resolution probably by the end of February. So that is the most thorough analysis on Bitcoin I think I have ever done. If you guys want to rewatch that stuff, you're probably going to learn a ton if you took notes. So let's move on to ETH. ETH looking okay. Let's look at the yearly. We're just going to zoom through this obviously a lot quicker. Turn off the drawings because those are unnecessary for this. Okay, huge continuation candle. I mean, geez. Almost 400% on the year. 3 month continuation. You can see it right there. Obvious continuation candle. Bi-monthly. Bi-monthly closed, but it was not a bearish engulfing. This looks like it's structural, so that's fine. Continuing of the uptrend on a bi-monthly. And we saw this back here actually going back to September, where we had multiple greens, then this correction, but it was not a bearish engulfing, and then we saw resolution over the next two bi-monthly candles. So the next two bi-monthly candles would put us into May. And that would almost be, you know, that would be interesting because, oh shit, that's crazy. So this candle right here was 144% gain, and the following candle was a 14% gain. And remember, this ended at $1,400 Ethereum on the 2018 all-time high. That 14 number is so important for ETH. That's been one of the big reasons why I was mentioning a $14,000 ETH at the end of this cycle. And if we were to consider, you know, like a let's just say no, that would have to be substantially more. Well, we'll see. We'll see. It's really interesting. So the monthly, okay, this is showing, so back testing prior resistance, not bad. This is showing a slowdown, obviously, on this monthly, but we can see that the resistance levels are right here around 3,400. And if we're going to get any moves down, it would be that level, 3,400. And that would be in alignment with Bitcoin coming down to like 43. So that would just be a mirror. 43,000 Bitcoin, 3,400 ETH. They'd just be a mirror of each other. If that's going to happen, that would be the technical level we would look for. So yeah, the monthly is definitely slowing down, but still an amazing yearly close. So let's look at the bi-weekly. Bi-weekly was showing us support at the prior resistance. So we had our prior resistance back here on these two twin tower candles. And you can see we held that level. And into this week, it's not looking great. But this is, you know, this sort of downtrending vibe isn't horrible because we still have our lows here at like 2.7. So we have closure lows at 3,060. Until we're closing bi-weeklies below 360, $3,060, we're in an uptrend, so it's fine. Let's look at the weekly. The weekly, let's look at, okay, so we have bearish MACD. I should have looked at the bi-weekly. Okay, bi-weekly is looking across soon, but we saw this here where it just hit it and then kept structure for a couple weeks. So something to consider on the MACD, but we still see it's above 50 on RSI. So weekly RSI sitting around 54, still in bullish posture. We can see that it's building a really nice support around 3,800. ETH really likes 3,800. Okay, so we have something else here. We have the 21 exponential around 3,750 closing today above 3,800 would be awesome, but ideally getting above that 13 exponential would be best. So it would be really good for ETH to start getting back above $4,000 as just a key level of a bounce. But so far we have low, higher, low, higher, low. So we're fine. We do have high, and then a higher high. So it's still an uptrend. But the weekly 21 exponential is where we would look for on the downside. Let's look at the 2-day because we know that's closing today as well. The 2-day is bouncing, but we could see multiple 2-day candles below the lows in the structure going back to here. This is kind of like what ETH likes to do, though. It really has been trading slowly up, and then lately it's been in a slow downtrend. It might be the almost identical amount of days by the time we get resolution, by the way. So if we were to go off of this day right here as the pivot from the big volatile breakout, we're looking at about 40 days. And then if we did 40 days off this level, let's see where we're at. So we've definitely overextended past that, about 53 days, but we do see a basing structure here where it took some time. So perhaps we're in that basing structure right now, something similar to this, where it's about time that we, you know, wake up. So from here off the, wow, that was 40 days as well. So from here off the base to the high was 40 days. If we go back from the high down here to the lows in the structure, we're looking about 50 to 40 days. Here on the other side, let's look, we're 53 days out. So if we extended over 60, that puts us around January. And this basing structure, let's just see, it took about 10 days. So off of this, let's just call that the day of the basing structure. It's looking about the 7th or 8th. We should start to see some resolution, which that aligns with the 7th and the 8th of January idea that I've been telling you before. So it would not surprise me if we get a complete opposite result of what we got back in the COVID crash. Let's go to the daily. This is probably going to start looking bad. Okay, so we have our 200s right there. So I'm just going to make it nice and simple and say that's the key level to hold. You know, it's the 3,400, 3,300 on the 200 moving averages. We have seen back before, though, when ETH wants to get bloody, it could really get bloody, and it pulls back even lower than those 200s. And I suppose that'll be in alignment with the 2-day. Pretty much. Actually, no. Maybe like the 144 exponential moving average. I use those sometimes, but I'm not going to play around with those today. I'm just going to try to keep it simple. And this 200 is sitting, you know, pretty much that would be the level we'd want to look for. So I'm just going to make this nice and easy. If we're going to get a downside move for ETH because of Bitcoin pulling back below 45, Once Bitcoin goes below 45, I anticipate 3,300 ETH to 3,400 ETH, and I suspect we will have a bounce at those levels, unless there's some sort of crazy flash crash. Then upside targets, I would expect anything above 4,130. We would start to see retests of prior all-time highs. So closures above 4,200 on the daily would definitely swipe us up into retesting all-time high. That's your range. We're nice and sideways. Got a nice death crossing coming. I don't really care about those though, because it's altcoins. Yearly close looking okay. I mean, definitely reversal for sure, because we have a continuation above this prior closure here, and this is just chopping into like a huge like bull flaggy deal. Okay, so 3 month, not horrible, did not do a bearish engulfing, so this is just kind of holding support at this time. 2 month, definitely showing us some problems here on the bi-monthly. Oh, this is just so boring. Yeah, okay, well, not necessarily problems, but we back tested the 8 simple. We closed above the 8 simple on the bi-monthly, so that's completely fine. RSI above 50, that's fine. MACD bullish, so that's fine. So the bi-monthly isn't horrible. It's just for how sideways this has been. Yeah, it's pretty remarkable. I shouldn't have said it was horrible. It's actually completely fine. I'm just thinking about how long it's been taking, and that's kind of why I said that. So I redact my statement. Okay, so on the monthly, we do have this sloping to the downside, potential MACD bearish cross. The monthly closed fine though. It looked like it closed above the 13 exponential. That's fine. I mean, ideally we want to get above that 8. We know that XRP has been struggling at $1. So, Bitcoin at 60K is like XRP at $1, which sounds crazy, but that's like the key resistance level that it's been struggling with. Okay, bi-weekly is looking fine. We've seen this happen before where we get highs and then we back test the 34 exponential, right? Like right here. We need to hold that level though. So we need to hold the 78 cent level. Otherwise, this is going to flash down to the wick around 66 cents. And if it can't hold 66, it's probably going to come down to, it needs to hold. Like it just needs to. It needs to hold that 60, that wick. Or we're probably going to go back to 55, which would be the 55 simple moving average on the biweekly, and it would also be the wick lows, and it would also be around the highs going back to before the SEC dump, and then the fake out on the automatic rally back in February 2021. So this is a key level to back test right there around 60 cents, and I thought we did it already. So now it's time to hold these levels here. You see this gap where we pulled back, and then we have right around here. These two closes around 70. It's like it's jumping 10 cents every structure. So that was what we were seeming back here to hold when we broke above $1 and retesting 90. But then once 90 failed, now we have to go back and deal with these levels. So it's just unfortunate because that's the way TA works on a coin like this. It's filling up these levels and it's yet to have an exuberant breakout going back to pretty much March, April 2021, almost a year ago. So anyways, upside target, I would be looking at $1 just because of structure. And then downside target, I'd be looking for about 80. It needs to hold the 34, around 80 cents. Let's go to the 2-day. Just scoop through this really quickly. Okay, the 200's holding. That's fine. That's actually perfectly fine. And the 200 exponential and 200 simple are literally together. They're at the same exact price. That's wild. Getting above that 88 would definitely be good. But the 21 is what I look for on the 2-day. So until we're closing above that 21, still the $1 level, like I said before. Now this is where it's showing obviously that $1 is going to be hard because of this cross right here. We have the 55 and both 200s potentially getting crossed bad. And then you could see we're below all the key moving averages, which we've seen since pretty much the dump going back on the 4th. We've been below all these key moving averages. Getting above that 55 around 95 cents would be good. But you could see the RSI below 50. That's clearly a problem below all the key moving averages, and MACD is pretty much bearish. Barely bearish, though. So sideways, potential double bottom structure, just like we saw with Bitcoin. And that'd be great if Bitcoin has some resolution to the upside, getting above 52. I do suspect we would see a breakout in XRP. And once it finally breaks above $1.20, it's a clear sky until 130, 140. That's the area that it's been consistently getting rejected at. So, breaking above $1, you're looking at a pretty decent trade up to $1.40 if you wanted to play it that way. Let's go on to our altcoins. First one, Zcash. Gonna try to bang through these pretty quickly because we have made this episode epically long. I don't need these moving averages. We're gonna play this simple. Okay, this is like a nice Wyckoff thing going on. So we have buying climax, which led to a dump of about 78%. Check. You have your selling climax, then you have your automatic rally, then you have your ST or a test, and then you have this right here could be an SOS, and then now you're in your backup. But your backup does kind of look head and shoulders like, so we have to resolve that, and the resolution for me would be right around 222 on Zcash. So let me pull some fibs and see where this is going. You can see right now we are at the 236. Like I taught you guys, that's the typical level after you have an exuberant move up. So let's look at the play-by-play. You had your buying climax followed by the selling climax. Then right here you get above that 236 fib, but rejection leads you to a slightly higher low. Now you're building structure right around this point. Then once you break above that automatic rally, you anticipate your SOS, sign of strength. And you can see the sign of strength was nice because it backtested the 236 once and twice, double bottom before it zoomed up to the rejection at the golden pocket. Then you always have these rejections at the golden pocket, bull trap, okay? This is not fun because this is where it gets shaky. Like a lot of people try to buy into this and then they get wiped. Which is why I don't like buying into the breakout like that, especially the golden pocket. It's not the way to go. Now we're still about, let's see how far down we are, because this is about as good as it gets if we remain bullish. Holding the 236 is about as good as it gets. One other thing we can do is we can pull a bearish retrace off this breakout right here to the high. And you could see the level that we got at the 888 is pretty much exactly where that selling climax came in. Literally perfect on 3 touches. Liquidity wick, the secondary, and then on the supply test. On the selling climax, excuse me. Now where we are is trading at the 702 fib. So the 618 was a rejection. You have your golden pocket on the downside, and you see how that's a majority of the trading. You have here, 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 and then all of what's been going on here. This was just a short-lived move. So that when you're using your bearish retrace, that tells you a lot about the lower levels, which is telling me that the 121 level would be your downside level if we are going to come down a little more. So you have your downside target of around 121. That would need to hold. Otherwise, you're going to start breaking down in structure, and this would be an end of a bull run because you have your blow off top, then you have your bear trap or bull trap, then you have the break of structure. So, if Bitcoin was to move down to 42, we could definitely see Zcash come down to 100 and backtest this wick. If Bitcoin bounces off of 42 and gets back bullish, then I would anticipate this was just, a downside fake out and this is fine. But if Bitcoin was to break 39, this would be the end of the bull run for everything too. So Zcash would break down further. I'm just letting you know. And let's see what this has done off of the COVID. Not even that great. Only 1,000%. Okay. Well. Oh, yeah. This has a lot of chart history. So this is a similar thing to what's going on with like XRP, where it's below its prior all-time high. I don't even know what's going on with this shit up here. But yeah, we're looking at this thing, all things considered, is down 80%. So off of the 97% down from the all-time high to the bloodbath. Okay, well, yeah, this this is something to take into consideration. We do have an prior all-time high coming in at around the 2618, and price discovery would clearly bring us into the 1300, but this thing should have room to go. I mean, because you'd want to pull a macro fib pull going from the all-time high down to the swing low of the C word crash, and the 4236 in this scenario would bring you up to the 3,300 area, which is somewhere around the 10 spot fib extension on this pull, and that's what most of the altcoins were doing, coming up all the way past the 6 into the 10. So if this really, really wanted to recover and finish off with a blow off top, it could go up as high as 2,000, let's just call it conservatively 1,800 to 3,000. If it was going to be really fucked up and boring, it would just be a double top somewhere around the 2,618. And even then you're looking at like a 6x, right? Okay. 400%. Okay. But in this event, if we were to get a really nice move up with price discovery, that's kind of getting you back to here. That's really weird. Whatever happened in 2016 where this was trading at, $3,000 almost. So yeah, it's possible for it to go to $3,000 because we have some chart history right here on Bitfinex showing us that's something that's happened. So this might be a venture capital decision for people. The only issue I have with things like this, like Dash, Zcash, Neo, these OG coins, is that they don't have the FOMO. Like, no one gives a shit about them anymore. And you do need retail FOMO piling up to have those blow off tops typically. At least the finality of the blow off tops, which is the 4 to 5 days of exuberance before it crashes. So you can move up naturally to 1,400, 1,500, but then to go from 1,500 to 3,000 could happen in 2 days just because of retail. So that's kind of missing from coins like this. Like, no one cares anymore about projects like, and I think this had to deal with privacy. Really, does anyone give a shit about privacy? I mean, I don't think so anymore. Our whole life is exposed on our TikToks and whatever the fuck people do. So yeah, I mean, I'm not negatively speaking about this. Technically, this is perfectly fine. You could see on the weekly, it's holding the 236. Holding above the weekly 236 would be perfectly fine and normal. And then getting weekly closes above 2050, you have to look for how we play around in the golden pocket, because most of the time, once we break the initial SOS, so we have our first SOS backup, the second SOS is where we move on to the end of the run. That's just typically how it goes. Like, Bitcoin right now is in its first SOS. And the fact that it went up slightly higher, that's a bull trap. And then it came back down, pretty much back testing into those 40-ish levels. That's a backup phase. And you want it to be a backup phase, because if it ain't, it's the end. And that's the bearish scenario. So when it comes to Wyckoff, that's kind of how you would play it. You see something similar to here, where it's like, if you were to look at this on a weekly perspective, you have your SOS backup phase buying climax. Then here you have your selling climax all down here. Then right here, this fake out is the automatic rally attempt followed by the spring. So this spring, then you have your test, which is all right here. Your first lazy SOS, I wouldn't really call it that. Then your backup. Then you have your next big move. This next big move would be your buying climax again. So you would just judge that based off of RSI and structure. But if you wanted to call it your SOS, this could be your backup phase if you wanted to look at this on a really large time frame. So the analysis that I was giving with Wyckoff was at a smaller time frame, something that's only a year of data, but this big long-term Wyckoff is going back 4 years. So again, buying climax, selling climax, automatic rally, spring, SOS, backup phase, then your next SOS, then this would be like a last point of support, LPS, or your final supply test on the lows, and this would typically look like a cup and handle. And that is about what we're seeing right now. Your cup, handle, and then your breakout. So that gives you the play there. And then you have your 120 level on the downside to hold. And, until this thing starts closing above $300, it's really not much to talk about for the gains, because it's an underperforming coin. And that might be a good thing. Underperforming, Typically good. 1 second. All right. IOTA. Let's see what's going on here. It's going to go to the daily. We're going to pull some fibs. Ooh, choppy chopper. God, that shit's all over the place. It's like multiple 5% candles, but every day they're just chopping back up and down. Okay, so I'm going to pull some... First, let me pull the bearish fib and see what the hell's going on. So we have our breakout around here. I'd feel comfortable calling that the breakout. And then you have your all-time high, so you're swinging from the breakout level to the all-time high, and this pretty much got within the 888, which was back testing this prior move before the final rejection and continue to what looked like a massive move for IOTA. You know, something like about 700% just off the breakout. So let's look at off the pandemic, looking at about 2,500. Not crazy, not crazy. Should have some room to go. And let's look at the losses from current highs. Down to swing low, about 78%. That's pretty normal. And from where we are now, we're looking at about only down a little bit, 50%. So it's seemingly okay in regards to how most alts have been behaving. Let's pull from this current all-time high, regular bullish retrace, and we've bounced off the 236. Okay, so this is looking okay. Holding this 382 is fine. We know that this is a clear level of trading action, 140 for IOTA. It's clear as day. This was all the struggle that it had at 140 before it hit the all-time high or buying climax. Then you can see right here, we've been dancing on 140 the whole time. Still there pretty much right now today. Now this needs to start trading into the golden pocket, obviously, to start having its correction. And because it's built so much support here, if it was to pop up to those levels and backtest there, that would probably be the final move. So on the downside, it would be as simple as the 236 around 107 in regards to Bitcoin coming down to like 44, 42, 43. You would expect around 170 for IOTA. Let's see where this is at on the other technical. So we're above 50 on RSI. MACD is bullish, and daily closes above that 382. Maintaining structure would be fine. A daily above 158, and I suppose we will swipe up into the golden pockets around 2, and then for price discovery, easy move into $10 probably. Let's see this on the all-time. If there's any chart history, this should be the biggest chart we have. Okay, so yeah, this does have some. This goes back to the first alt season, which, okay, so we have something similar to like I was just showing you with Zcash, where the prior all-time high comes into alignment with the 2618. So if we are gonna pull fibs as such, let's see where that 4236 takes us. Somewhere around $32, which, you know, that's going to be the quick move. Like 13 to 22 would be very dramatic, but it's not out of the cards because we've seen this pull, the pull from prior all-time high to swing low. Getting up to the 4236 on the macro pull is very normal. So that would be around 20 if we're going to have a nice bullish end for IOTA. And that from here would be a gorgeous move. I mean, damn. It would be pretty much what Solana's done, you know, like going up to that 10 spot fib extension. So that'd be an additional 1,500. And most of the altcoins that I'm interested in are pulling off on that move. So IOTA, I might invest in this shit. I don't know. We'll see. I believe I could get it on Binance. Yeah, so I might pull the plug on this. This might be good. Little venture capital bag for me, like a 2%, especially if we see Bitcoin come back a little bit and hold support on like the 44, 43. I would scoop some of this up maybe. Yeah. IOTA not looking horrendous. And I believe there's some New World Order going on with this IOTA coin. So another reason. Oh, Harmony One. It has broken out. Shit. I haven't looked at this thing in forever. I do have a little bag of this. So this is a clean chart. I'm going to go to this right here and see where it entered price. Probably the 1618. I bet you. I bet you. And who was right? The 1618. Rejection. But I really like this. So when you get to the 1618 and get your rejections and then come back down to the golden pocket and hold that 618 followed by recovery, and look at this. This is clean as day. Backtest the 618, come above, backtest the 888, and then bounce, and then we've just made a new high in the structure. So this is kind of like what we're seeing right here. You know, we have to get above these levels and hold this, and this would be, I suspect we're going to have a breakout in Harmony 1 to the finality of its run very soon, given this remains bullish, and I would suspect probably into this 80-cent level. I don't know how much more this shit can go, though, because, like, come on now. This is ridiculous. I mean, it's definitely could go more. I mean, Theta and a lot of other coins have outperformed this. So, yeah, I mean, if it's going to go all the way up to those 4236, yep, so that would be about where I would anticipate, about 80 cents, because we see about like 40,000 to 50,000% was pretty normal for the altcoins from the C-word crash to the highs. And then if we were to pull, you know, a macro fib from around release to lows, that doesn't really help us. That would put us at like the 20 spot. So yeah, I mean, when it comes to an exuberant alt move, it's the 6 spot fib extension is really where it likes to slow down, but we've seen moves into the 10, but it's the 6 that it really likes to chill. And yeah, that would probably put us into oversold on everything, or sorry, overbought, excuse me, overbought on everything. And this structure right here is amazing. I mean, you can't get much better than this. You have your pullback, move down to the 236, rejection off the golden pocket, selling climax, and then this has just been a healthy uptrend backtest. This is like what ETH is doing, actually. ETH is doing something like this as well. It's just this is looking more bullish right now than ETH is, but this is typically what ETH was doing, you know? Like, it was like this double bottom shit after June, July, then it was like a nice, beautiful uptrend. But this Harmony 1 thing is looking good, because it's price discovery, rejection at the 1618, backtest the 618 or the bottom of the golden pocket, followed by, once we're getting above this wick right here, that's a continuation. It's just a little V-shaped dip. So yeah, I gave my upside target, and downside, unfortunately, will still be the 16 cent, because this shit can come right back down to the bottom of the golden pocket. Easy. This looks like this is a clear uptrend in the short term, because we have our low, and then we have our higher high off of, so you have your high and then basically just multiple highs on every single daily candle on the wicks, and then today was an official new high after the pullback, so that confirms this as a higher low in the short-term structure. So you'd have low, higher low, higher low, higher low because of today's continuation, especially if you're going to get a closure today above 28, 26 cents, 27 cents. This is looking good. But yeah, we do have that downtrend resistance line that I showed you that could be in play, especially if they want to get a little bearish in the short term. But 618 is possible, 16 to 17 cents on one. And I already invested in this thing. I wouldn't touch this thing right now. I don't like buying things above the golden pocket. Electronium. Oh man. Yeah, this is one of those charts. Okay, this is a very ugly downtrend that we're getting. Excuse that wick. Let's see what is going on here with this. So, okay, we're going to pull some fibs. I'm going to pull the bearish fib real quick off the breakout. Yep, this can go to 7 cents. Or 007 actually. And that would put us into oversold RSI, I would imagine. It would be, you know, it is much better to pull off the, it's hard to call the breakout level on the bearish retrace. Okay, I think we're done. I think we're done on this. This thing needs to stall out soon. This is about as good as it gets for buying in. I mean, honestly, if this shit's going to go lower, it's a double bottom, and I know that that would be more blood, but it would be the reason to DCA into this, because you can see this cluster right here, this cluster right here, the back test right here. That's typically, and it was in alignment with the 888 fib off of that pull, plus RSI basically oversold. I mean, damn. This is the automatic rally, and this is the downside, supply test, but it could easily become a spring. And in altcoins, your spring could be akin to a double bottom as well. But, lower is what we see. It's just that rejection off the golden pocket, that's not fun. Because when you reject off the golden pocket and then start making lows that are lower than the prior higher lows, that's where it gets bad. Let's consider Bitcoin, right? This move right here for Bitcoin, it went around 30, is it 39? Shit, I don't remember. But I just want to show you what the hell I'm talking about. So you see Bitcoin right here. This went to 39 on the lows, but we're above that. We're actually maintaining structure. But if you look at Electronium, this was the lows in the structure, and we're below that now. So this is looking like a shit coin. Like, this is not good. Just, being honest, because that's what this is. This is bad. And it's not even able to hold its prior exuberant move up back in May. So this hasn't made much progress at all, Like, if we're looking at this from a perspective of it's only made about a 2,000% move, but this blow off top was quick. If we're going off the C-word lows up to where we are today, we're looking at only 330% gains. So, like, Bitcoin is outperforming this thing. I wouldn't really mess with this. It's not a great performing project, and it also doesn't have a ton of chart history to speak. And I mean, it could, during an alt season, at least 15 to 20 cents, which is great. I mean, that'd be around everything else that we talked about, though, around 1,500% to 2,000%. I just rather do it in a coin that has a little bit more chart history and a little bit more stability, because when this alt season comes for this coin, it's going to probably be too quick to make moves. So you just really need to do good TA on this and have your sell limit orders preset and not get greedy, because this is clearly a coin that's traded heavily by retail. And that's problematic with the way that this structure has been. Breaking those lows right there is bad. But holding support at this level pretty much gives you right now is the best buying opportunity that exists for this coin, unless we get even bloodier, and then that would be the obvious double bottom. So between 0.006 and right here is where building a position in this coin would make a lot of sense, because even going back to prior all-time high, you're looking at almost 4x. That's nice. Yeah. And even if it just only gets to the 1.618, which is a typical level we like to stall out on, that's a 6x. So, I mean, fuck, that's a lot if you're like considering what the stock market does. Yeah, I don't personally have any interest in this because of the chart, the way that it looks, and the structure not holding. I mean, shit, it even came below the lows on the back test before the buying climax. That's not good. It's almost showing no progress. I guess, though, if you've, it's kind of like an XRP play, right? Where if you've been in it long enough, it's all good in the hood. If you were buying at the lows, you have a double. I guess. If you were really buying during the COVID, which I doubt anyone did, you're only up 300%. I mean, I don't know. You really have to be good at TA to play coins like this. That's what I'm trying to say. And I don't like to get into stuff that you need to be super talented at reading the charts in order to make moves, That's not what you want to be in. You want to be in projects that you could leave your money in for years and years and years, and it's fine. Not things that you always have to be worried about getting out of because they're trading all over the place. So Avalanche, let's see. Mamma mia. Okay, this is ready to finish off its run pretty soon. So you could see right here, buying climax, selling climax, double bottom. And then once this had a SOS, it was a back test that lasted about a week and then blast off. But again, if you bought this golden pocket, just to show you for context, if you bought the golden pocket, you're only up 200% right now. So that's not like there's a lot more opportunity. If you bought the golden pocket, you're at the 4236, you're still only up 450%. So going back to Electronium, if you bought right now, just going to the all-time high would be 400%. And Yeah, so this is clearly a much better project, though, and I know that it is. I know Avalanche is solid, but this chart is getting a little bit much. Clear bearish divergence. So you have your 90, 99 RSI of the daily. Are you serious? Holy shit, 97 RSI. And now we're sitting at an RSI of like 56. So this is ready for the final move. This is kind of like Solana, where if it's going to move higher, it could move into the 6 fib, somewhere around 313. But that swipe up might not last that long. And then you would have to see how structure holds. But this isn't an opportunity any longer in my book. I wouldn't put any more money in this if you already have. I would just be looking to get out. Yeah. Beautiful play, though. Congratulations. If anyone bought this around the time that it was hitting exchanges, you're about 4,000% up on this kind of boring sideways market before it hit its first high. And then if you sat through all of this chaos, you still you're only a year out and you're up 3,000%. That's pretty fucking great. And I'm sure this was off exchanges even lower than $3 for a while. So yeah, at the top, you're looking at about 6,000% if you were in it back then, but now it's just not the same reward anymore. And a similar structure to Harmony 1. Right now, if you wanted to look at this as an inverse head and shoulders, that does have something to be said about that with your neckline somewhere around here. I'm just going to quickly draw this shit up because, okay. And you're looking to move up into pretty much, I would just call it the 3618, and at that point, you're better off calling it 200 because that would be the psychological resistance number. So 200 is probably the next move up on this. Once it could break above that 2618, which you can see that was the rejection that it had back at its prior high, due to the measured move off of this potential inverse head and shoulders and the 3618 basically being at 200. Yeah, I would say 200 to 223 is the next move for Avalanche. And at this time, I would not be looking to buy back into this thing, even if it dropped back to retest the lows at $80. I would not care at all about this. And if it doesn't hold this wick low at 76, let's just say, then that would be the end of the run because you would have your all-time high pretty much getting to your extensions after a big run. And then you have your bull trap fake out followed by multiple lower highs, which would break structure at 76. And then not being able to hold 76, you're going to come right back down into the golden pocket somewhere around 50. So for those people that have been in this project for a long time, see how it reacts in the short term. But I wouldn't get greedy. I would remove your initial investment at least because of where this is at right now with a blow off top look structure, with a bull trap looking structure, and then on top of that, a clear bearish divergence. This has already done its thing, it's already hit the 1,300% gains, which we've been talking about for most of the altcoins. Around 1,400 to 1,500% gains is where you are looking for your big moves. And going off the lows, I already showed you. So don't get super greedy on this. It also hasn't really done a clean bounce off of the 1618. But at this time, it does look bullish, inverse head and shoulders, and then we just have this level of 127 to break on the upside for continuation. And we'll leave it at that. Final words on just really quickly on Theta and T-Fuel, because this was voted a lot for some reason. People keep voting on this, but just very quickly, okay? So where we're at right now is a very key level because we can see that we got a little rejection here before the parabola and then back tests around this exact level we're trading at now. We saw it hold around the September full moon. Then we can see here it was where our rejections were. Pretty much this $4 to $5 level is very key, psychological level. And then we have a downtrending resistance line that clearly has a touch point from all-time high rejection, all of these rejections here, and that is intersecting somewhere around $6 by the end of this month, by the middle of this month, And then we have here, which was a short-term support line going back at the selling climax, this supply test around that September full moon, and then it was holding until the dump. So these intersecting are showing me that these could be potential, but because this is a longer term one, the one that goes back to the all-time high, getting above the 236, and let's just extend this out for fun. Sorry, I know this is kind of arduous, but it'll show you what the hell I'm talking about. So, I mean, depending on the speed at which this happens, I don't really see this market lasting much further than April. So getting above 10, this 382 would pretty much signal that, okay, we're ready to move. And that would be within these wicks right here. That would be within this prior support line. We do not want this to flip as resistance, but if this was to move really quickly into the end of Jan and get rejected and then come back and backtest the 236 followed by a bounce, that'd be incredibly bullish. But as long as we're below the 236 and as long as we're in this shitty looking structure, this is, beaten, bruised, and boring and bloody, and no one gives a fuck about theta anymore. And that's kind of like, another reason why I don't mind building positions in this, because it has the performance, clearly bullish performance. It needed this sideways price action, and it doesn't have any prior all-time high like coming back actually I'm not yep, it doesn't, because it would have been from here. So okay, with all things considered, this structure right now that we're having, it's ready for a relief rally. And with this recent fake out move into $6, it's showing me that that is the key level. So because $6 will be around where this current resistance line is intersecting with the price, breaking that 6 and getting above the 236 fib would tell me this is probably the last dip we're going to get on this project. And that is that would have to deal with Bitcoin's move, of course, and how ETH has acted, etc. But for now, yeah, I'm keeping my eye on theta, and any $5 or less theta is like a gift in my opinion, just because of where this has potential to go. And being probably like the 4th largest coin I hold. So anyways, at this time, it is the same analysis as everything else I've been sharing, and just the final thoughts on T-Fuel. I really like this W bottom into this 888 fib. This 888 needs to recover soon though. So this is just a pull from the low wick here up to the current high. And once we couldn't hold this structure any longer of the bottom of the golden pocket, we dumped further. And what does this look like to me? This is a spring. So a spring in Wyckoff where we have an all-time high, selling climax, automatic rally, and then this sort of, crossing the creek. That spring is really nice to get. I know it's bloody for those people that aren't long-term investors, but for long-term investors, this is about as good as it gets. And you can see that we had RSI levels that were as low as pretty much the lowest we've gotten since maybe the C word. Yep. So when RSI is approaching levels below 25, that's always a good opportunity to start accumulating. So I have reaccumulated some more T-Fuel, and I will continue to as long as it stays below 27 cents or 25 cents. Ideally, 24 cents. It's an opportunity for me. So yeah, I'm just going to leave it at that. This to me looks like a spring in Wyckoff method. Go look up what that is. It's pretty much like, when we break structure to the downside to trap bears into thinking we're going to be more bearish. And then we typically see a bullish reversal, with those being the lowest opportunities to get after a long consolidation range. Now, with that being said, of course, we have Bitcoin and Bitcoin's price action. Any Bitcoin below 45 to 44, we're going to start having some issues. And of course, that will bring T-Fuel down. That's just inevitable. So in about 4 hours or so, maybe 3 hours after I post this video, we do have the CME opening up, Chicago Mercantile Exchange, I believe. And that will bring volatility to the market. And we also have our weekly open for the Dow Jones and everything going on tomorrow at 9 to 10 a.m. with the stock market opening up for the first day of the year. So just keep that in mind. When it comes to this volatility, tomorrow could be something to consider. And then remember the beginning of my video talking about January 7th and January 8th, the 666 days since the pandemic lows, something to also keep in mind. And I will probably be making a YouTube video tomorrow breaking down some extra things regarding the weekly close that we're about to have later today, and just recapping how that went, because it was also a bi-weekly close as well. So I hope you guys enjoyed the first episode of the new year, packed full of data with Bitcoin that you guys could use for all of your other coins. And I hope you enjoyed the altcoin analysis for our Red Pill podcast number 40. I appreciate every single one of you. Looking forward to the year of 2022 together. Have a great rest of your weekend in the Matrix. Much love.